At least you
All
caught
right,
it.
we're recording. Our guest today is Jiyan Wei. He's the founder of BuildZoom, which is an online marketplace that matches homeowners with contractors. And prior to that, he was head of product management at Vocus, which was acquired by Cision. And before that, he spent nearly 4 years as head of product at Vfluence, which was kind of like a PR agency that also had some sort of an online place. We'll talk a little bit about that. He's an expert at building disruptive products and driving online revenue. So I'm psyched to have him with us. And, he has a BA from Georgetown in English and Music Theory, and then a master's from the London School of Economics. Jiyan, welcome to the podcast.
Thanks for having me. I'm excited to talk.
Let's talk for a minute just before we get started, sort of about the backstory with the English music theory degree. Were you like a musician growing up, or what led to that?
So my parents were adamant that starting at about age 5, I learn violin. So I was playing violin from the age of 5. Private lessons twice a week, and then like music theory classes on Saturday morning. So it was just something that they pushed on me, and I
Were
didn't
you
push
into
back.
it?
So
Did you like it? Like, were you?
I think that once I stopped taking like private lessons, I enjoyed it a lot more. I was able to actually play with like other musicians, and just kind of have fun with it. So I did really love the instrument and like the music. I didn't like the structure of like your typical symphony structure.
Did you ever think about jazz or pop? I mean, was it like, oh, I want to be a musician, but I got to make a living, so I'm going to go to London School of Economics? Or
I never loved it. Yeah, I didn't love music that much. And I wasn't. I quite frankly, I think it was because it probably didn't love me that much, and I wasn't good enough to even think about making a living doing it.
it's amazing,
Yeah.
right? The levels of how expert musicians are. I mean, at the top, there's like 5 more levels up there. Some musicians are so good.
Yeah. Well, I think they're wired to. First of all, they're naturally good at it. Then, secondly, I think they're emotionally wired, so it means something different to them, right? And like they can't not do it. Like literally, they couldn't not do it. I mean, for me, I could very easily not do it, and I oftentimes didn't like the way I sounded, and yeah, I think they think they're wired differently,
Were your
completely.
parents crushed when you gave up the violin, or were they good with it?
No, they were good with it. I mean, I was 18 by that point, so
They're probably
they.
relieved. They're probably relieved by that point.
Yeah. They didn't really also have too much control at that point.
Now, so your education is, you get your bachelor's at Georgetown, and then you go to London School of Economics. It's typically a runway for a career in politics.
Yeah.
So
No,
why?
I mean, I think so I definitely was like thinking pre-law and maybe move into, government potentially or politics after that. I did not like sort of like the pre-law track. I started talking to a lot of like junior associates, and I don't know how familiar you are with that industry, but like associates, especially, the more junior associates at firms oftentimes don't have like the best lives, and that kind of freaked me out and scared me off a bit. So my senior year is when I really was like, okay, I probably don't want to do this. I want to do something different.
I read this book called Authentic Happiness by a guy named Martin Seligman, who's the president of the American Psychiatrists Association. And he did these tests to try to figure out how happy people are. And he handed out pagers with 5 buttons on them, 5 being the most happy, 1 being the least happy. And he would page people throughout the day and have them select how happy or unhappy they were at that moment in time to do this experiment about what authentic happiness was. And what he said in the book was that of all professions out there, typically the people that are the least happy are lawyers.
Yeah, I wonder if they were the partners or the associates, though. I sometimes think the partners have sweet lives. You have to, right? But yeah, I mean, it's a tough job, and they're kind of on the hook with billables. Like there's a lot of pressure in that job, especially if you're at a firm.
So now, you were a joint major in English and music at Georgetown. Was that hard, juggling both, or not really?
So actually, I had a mandate from my dad going into school, which was like you have to maintain a 3.5 or above, otherwise I'm not going to pay your tuition. So that's why I did the music minor. That's why I did music, because that was like just easy A's for me at that point, right?
Strategy,
I've been
right?
doing that since I was 5. And with English, it was, again, I think it was just like easier to get A's without having to exert myself too much. That's the sad truth.
So what's
I did love writing. That was something I truly was always in love with.
uh-huh.
I love the act of like just creation, and like for me, the medium of writing was one that always was particularly appealing to me.
How are
I
you with
loved reading.
numbers? How are you with numbers?
Um, yeah, I mean, again, I think that I'd say I'm pretty strong. That would be an area where, I'd say actually I'm equally strong in both. One of those two things though, writing, I think I actually emotionally like love, right? The number side of things, I never got to the point that you see some mathematicians get to, where they just love, the discipline. Um, I never felt like I loved the discipline.
I mean, you got to know numbers pretty well to have raised $27 million for BuildZoom in 5 rounds. So, tell us about that ride. I mean, starting from sort of from
Yeah.
square one, how you got it off the ground, and what it's been like, dealing with, constantly raising money to, continue to grow and scale.
Yeah. So, early on, Dave, who's the other founder, and me, were really interested in the space. I mean, we both had experiences as homeowners. And I mean, this is like your typical, typical Genesis story, right? You have like, and it was true. Like we had this miserable experience. We started talking about potential solutions. We really looked at the market, realized that the market was so large. We're talking residential remodeling being 250 to 350 billion-dollar annual market, and that doesn't include owner-led residential construction, which may be another 150 billion or so. Um, so this is a big market, and it has like typically, according to like some sources like Consumer Federation of America, it's responsible for some of the largest problems with consumers. So we love that. We love the market, and had a really good idea about how to solve just one problem, which was supply demand matching. Well, uh, quality identification on the supply side, and then supply demand matching through data. And it really started with this idea of creating an index of every licensed contractor in the US, and then learning as much as we could about them through public record. And so we built a system that was aggregating licensure data from the states, and then building permit data from smaller jurisdictions, combining these into like this superset, like this huge encyclopedia of every single contractor and like projects that they had worked on. And then from there, we were able to build a scoring system that, I think was pretty effective at figuring at least who was like a legitimate business, right? Who had been operating for a while, had doing projects for a while. And then we from there, we went to building a matching, kind of the initial matching system between supply and demand. So when consumer comes to us, we ask them sort of a bevy of questions, and then based off the responses, we're able to kind of come up with like a short list of suppliers that we'd want to connect them with. And at that point, we built a lot of this stuff just ourselves. And then I mean, and it was pretty sloppily written. But it was enough to get a lot of visits and a lot of users signing up on both sides of the marketplace. Then we went to Y Combinator, and that was really, Y Combinator was probably the launchpad for a lot of the venture stuff, especially at that time. It was like 2013. We were like one of the smallest classes in a while, and there's a real big investor audience. So
For those who don't know, and that actually, let me just back it up. We're talking to Jiyan Wei. He's the founder of BuildZoom, and BuildZoom is a marketplace that matches homeowners and contractors for home improvement. And so he's built this marketplace. Now, I'll tell you, you guys know I built iPress Room and sold that. And I mean, there's nothing harder than a tech startup. But I mean, if there was one thing, if there was the hardest class of tech startups I could think of, it would be a marketplace, because not only do you have to bring on customers, you have to bring on two sets of customers. You have to bring
Yeah.
on the homeowners, right? The customers who are going to buy, and you have to bring on the contractors, the sellers who are going to sell. So that definitely seems, I mean, of all the things you could have done, that seems like it's one of the hardest problems to solve.
Yeah, the marketplace, a marketplace is challenging to build. And just to clarify, actually, we actually we've evolved quite a bit and focused on more, I would say, construction versus home improvement. So the average contracts that we're typically working on are ranging anywhere from around 50K all the way up to 3-4 million at this point. And we've made this decision pretty deliberately over time. It's actually because the nature of our system. But this is where we found true product differentiation. Because we have the data and we're able to really mitigate like a lot of risk along the way. This matters, like it increasingly matters for when the stakes get higher. And actually our revenue model is predicated off two streams. One is owners actually pay for what we call premium, where we actually have an internal team of construction engineers who will walk through the pre-construction process for them and serve as their representative, from through pre-construction, which means, working with the architects, coming up with an RFP, managing the bidding process through our technology. So we put basically a construction professional on their side who has their interest at heart, who's now dealing with other contractors bidding on the job. So we kind of, are able to like level the playing field and even the power dynamics this way. So the owners pay for that service, and then there's just sort of an ongoing fee we get from all the GCs and architects that end up being on our network on the supply side. But that revenue model is also far more conducive towards larger, more scary projects. And so that's really where we've found product market fit with the level of data and the technology we've built. Our revenue model is a little bit higher up in sort of the market, I think, than your Angie Home Services or your Thumbtack. And I have a great deal of respect for those companies, but they're in, sometimes people will say, oh, home improvement, like we're like actually like building the houses, right? Or in some cases, like building multifamily developments or tearing down or doing gut renovations, whereas we're not just doing like windows or siding or things like that.
So you spent 5 years as head of product at Vocus, which got acquired by Cision. That must have been an interesting ride. And then you basically, you and your partner Doug launch BuildZoom.
Dave,
I'm
sorry, that
sorry,
was Dave. Yeah,
you and
that's
your
all right.
partner Dave
Yeah,
launch BuildZoom, and you wind up at Y Combinator, which is an incubator. For those who may be listening who don't really know about that world, tell us about sort of why you decided to go there, and what did it take to sort of pitch them and get accepted into that program?
yeah. So Y Combinator is great actually for outsiders, because it's like, I think what they give you is access. Access is a really big thing in Silicon Valley. Access to
Access to
investors.
investors, yeah, right.
Yeah, I mean, and it's honestly, in many ways it is sort of a relationship based industry. That part of it does tend to be relationship based. Now, there's not a lot of like investors aren't going to make bets based off relationship, right? But like to get access, right, to the GPs at these firms, like relationships matter, and that's what YC does, I think, really kind of uniquely. They certainly did it at the point we went. They just give you so much access. We were able to, like, after we went through the program, we were able to kind of connect with 50, 60 VCs that came inbound actually. So that was great. They also bring you together with some really talented entrepreneurs from around the world, and like they have some good systems in place to like have you collaborate, and actually you really end up becoming really good friends with some fantastic entrepreneurs through the course of this. And they have some really good partners that you know, depending on the industry, I would say, but like if it's like SaaS or like B2B SaaS, or you know, things that if there's a partner with familiarity with what you're trying to build in that market, it can be really, really helpful also. So
Any
that's what Y Combinator is about.
interesting startups that came out of your class that we might know?
Zenefits was pretty big. Teespring came out. Boy, I wish it like yeah. Actually, this isn't live, right? Let me pull up a list actually, because I'm blanking on them, but there was a few Padlet.
We are live, by the way.
I want because actually, if any of the other founders hear this and I forget about them, they're probably going to be pissed off.
But they're probably beautiful people, and they probably enjoyed the
yeah,
love of
yeah,
their
yeah,
friends
yeah.
and family, and they'll understand. So so you come out of Y Combinator, and
Sorry, Gold Belly. I'll throw that one in there too.
Gold Belly is
Gold
another
Belly
one.
in Tirana. Yeah.
In Tirana, okay.
Yeah. Okay. All right.
So you come out of Y Combinator and you do your first round, right? It's sort of a seed round.
Yeah. Yeah.
And how much
Actually,
did you raise?
Y Combinator invest some seed capital in you. And then we did a seed round of like, you know, a bit over $1 million, 1.3 or something like that. Yeah. And you know, that
How
enabled us
tough
to
was
actually.
that? How tough was that? Like, walk us through from soup to nuts.
Yeah.
You're sitting down with Dave, and you're like, "Hey, dude, we got to launch this business. We're gonna clean up. It's gonna be amazing." From there to this $1 million round, walk us through that soup to nuts.
Well, we were already working on it no matter what. Like, right, once you get into YC, you get enough. It's not like we had enough capital that we were able to like work on it with minimal operational costs, right? So we're going to work on it anyway. You know, the capital helps you kind of move faster, helps you accelerate. And early stage, what it does is it helps you sort of pay for engineers, right? And you know, so I think the biggest challenge is like really understanding, you know, how to tell your story effectively. And that was something that you have to learn. And actually it was good, you know, like to get like 40, 50 reps in, right? By rep like 20 or 30, you kind of start realizing what actually you should say, what you shouldn't say. Right. And then it's all about finding just sort of like that right match between someone you like and you feel comfortable with, they like you, they feel comfortable with you. Early stage, like especially out of Y Combinator, like terms should be fairly normalized. It's not like you're going into like prolonged negotiations or anything like that. But I think the biggest thing is like just understanding how to effectively like tell your story.
So 30 pitches in, you start to feel your stride pitching VCs.
Yeah, I'd say
How long
maybe
does it
20.
take? How long does it take to get through those first 20 or 30 pitches?
You know, we split them up and then we would debrief. We'd split them up and we'd debrief after. So maybe 2-3 weeks.
And did you
Something like
do
that.
them virtually? Did you do them in person?
No, I mean, this was 2013. We're just doing them all, meeting. You know, everyone's kind of like, we were actually in Palo Alto, but everyone was down there or had an office down there. So we would just meet in Palo Alto.
And so how do you tell your story? How do you package a story in a way that attracts investment?
Yeah. So I mean, it depends on the stage, right? Like at this stage, they're using one heuristic, which is like the assumption that you're not like, you know, baloney, because you went through Y Combinator, right? So they have like there's like a sort of this stamp, and now their question is like, do they believe it all in? Do they like generally it's like, do they like you, and like, you know, do they like the team? Do they believe in the team? And then they're going to think about you know, the market, I would say, and then who actually, let me go in order of priority. Actually, I would say number one is like, who else is invested in you? Two is like, do I like this person? And do I find them credible? And do I think that they're going to be able to do something really cool? Three is like, do I like the market? I think it's probably like 4 or 5 where they're like, okay, tell me, what does your product do or your business do? That would be like a little further on down the list. You know, and then at some point they're going to be asking themselves like, can I see a liquidity event at 10x? Like, what's my chance? Is there like maybe if everything's a yeah, they're like, hey, look, is there like a 20% chance that I'm going to see like a 10x liquidity event? You know, um, and then they'll, and if the answer is yeah to all these things, they'll cut a check.
So if there's a 20% chance that they're going to get it 20 times the return,
I was going to say
then
a 10x return. If
a
there's if
10x
there's a
return,
20% chance that they'll get a 10x return, and
then
everything else on that list
and
was
they like
yeah,
then they'll
like
roll
they'll
the
do it.
dice. Yeah,
Yeah. Now,
yeah.
if something on that list like was like really high, yeah, like they like love you, they may just stop there and do it right at that point, depending on size of the check.
And so in terms of checking the boxes on, whether or not they like you, what are some of the sort of biases that these investors have before you walk in the room? What do they want to see on your CV before they're going to say, oh, this guy's legit?
I don't think they really look at your CV. I mean, a lot of it. So if they were, maybe they glance at it. Like if they found you through if they found us through Y Combinator, they would have heard our demo day pitch, or they would have heard us talk, right? And I don't think there's a lot of like, let me look at this person's resume. They'll ask you what your background is, right? Like, how'd you get into this? Sort of like you did at the beginning, right? Like, they'll get like a high level, but it's not like they're doing like deep due diligence into your background. Yeah. I think the main thing is like they want to feel like that you are somebody who really understands, has a mastery of like what you are trying to do, and if things don't like pan out, will actually be talented enough to figure out something that does work.
So that's what gets you to round one, and then you've done 5 rounds now. So you got round 2, round 3. I got to think that as you sort of get up there, they want to see not just revenue, but like what I would be nervous about if I was you going into pitch is I would be nervous about whether or not if they tested my system, I'd have enough action in disparate markets, because construction is location specific. So what if they're in New Hampshire or Vermont or Minnesota or wherever they are? I'd be worried like, oh well, if we go into that market and we search our system, do we have more buyers than sellers or more sellers than buyers? How do we even it out? Was that something that you've been sort of looking at? How do we sort of develop each individual market?
Um, there have been, yeah, I mean, I'd say that we've always had a method through which we kind of broke the country up into sort of regional zones, and then prioritized those zones, and tracked like health of the supply side in those zones, and got proactive in some when it was clear there was sort of like a dearth of good talent in that zone. But we never really would have done that to kind of just to like in case like an investor may have like popped in a service request in some region or something like that. Now when they've used the system, we have like paid attention for sure, right? Want to make sure they have a good experience, but generally like we've taken a more macro view of the supply side in the marketplace.
Well, if it has been a buyer's market in a certain geography and you feel like you want to increase the supply, how do you do that? Like how if because I know like in LA right now,
Yeah.
it's really tough to find good trades. It's really good to find good subs because everyone's busy, money's cheap, and there's a lot of development going on. So what do you do? Like, is there some way that you sort of went into the market and developed it?
LA is pretty unique. I mean, LA is kind of, for I think construction and development is kind of in a bull market phase right now. And so there may be a deficit of subs, and that can happen certainly in like growing areas. I mean, generally speaking, like we found that if we're talking to them about a project as opposed to telling them reasons that they should, you know, join our service in the future, right? Because we promise them X, Y, and Z. Instead of that conversation, it's more like, hey, we're potentially maybe we're interested in you potentially bidding on this project. Can we talk about some of the details of this
So what are you
project?
calling them or emailing them? How are you actually going head to head, one-on-one with subs and contractors and trying to bring them onto the platform?
Yeah, so first is I'd say we generally are pretty focused on like the GC or home builder, right? And second is keep in mind the system. So let's say we get like an owner who's doing like a ground up build in, I don't know, in Santa Barbara or something, okay? And we're able to go into our system and we'll be able to look for all the contractors who have a B license according to the CSLB in California, right? Who then have done permitted ground up home construction within like, let's say 40-mile radius of Santa Barbara. And then we'll be able to look at the features of the property that's being built and the features of the properties that have been built by those homeowners
Based
and look for
on
similarities
based
there.
on the permits, based on the plans that were filed with the permits? I mean, how
The
deep
the
do you go?
features of the property go from like more parcel level data, which we
Okay.
have. But yeah, the permits tell us it was a home build, right? And then the parcel level data tells us what the home was all about. But anyway, by having done this analysis and come up with this match, like my outreach, my cold outreach to you is no longer like, hey, I'm BuildZoom. You should work with us for reason A, X, Y, and Z. It's like, hey, we saw like you'd worked on a project at 5501 Florida Street, and that looked pretty similar to a project we're bidding out right now. We're working on a lot, right, like half a mile down the street, and are interested in talking to you about potentially putting a bid in. And actually, that's all pretty realistic, right? And it can also be generated by a machine. But that kind of communication, that where it's like highly contextual, there's like the reason we're contacting them is because our system's done all this analysis, right? Uh, and we're actually talking to them about a project. Those have kind of helped facilitate sort of pretty good conversations, I'd say.
Yeah, it's compelling to come from the customer side because you've got the business, you've got the potential revenue for them.
Yeah,
Um,
yeah,
Talk to us a little bit about, there's, I know you know this, but for listeners who don't, there's a strategy in digital product development known as a minimum viable product,
yeah,
aka MVP, and it comes out of
yeah,
a way of doing things called lean manufacturing or lean, which basically says, don't build out all these crazy features in your product until you know people are going to use them, because you can't always and usually anticipate what the market wants. And so you may wind up building out all these expensive features that don't get used. So rather than, when you're developing a digital product, rather than, building all these things that you think are going to attract customers, fake it, sort of mock out, build a straw man of what you think they might use. And then if you see demand for specific products in there, even though they're not built out, then you can start developing them based on that. How do you feel about that approach?
I mean, we use that approach today. I mean, we have an engineering team, but we don't build things based off like speculation. We will always look to validate. We'll actually. So I'll give you an example. We wanted to develop a system to kind of normalize bids as they come in. One thing that people have trouble with on construction project, like owners typically will have problems with, is reading bids and comparing bids. Okay, there can be 3 bids with like one can have like 60 line items, one can have 40, one can have 50, and then there's like a contract sum. In no way can you compare those contract sums without actually normalizing all those line items, because you'll see like, hey, bid 2 is missing 10 things, bid 3 actually has included 5 things, like, and so this is a big issue. We wanted to build out a system for normalizing and then comparing those things, so that we could help the owners truly understand what they are either getting or not getting, and make an apples to apples comparison. Um, you know, like there is a temptation, especially when you have capital and you have an engineering team, to say, let's go build this, like, right, like let's go spec it out with design, let's put it into engineering, let's construct the data model, let's get front end engineering to build this awesome thing. Like we just use Google Sheets and prove it out, and people like love it. And then we're like, okay, let's see how far Google Sheets can take us. And then we see how far that can take us. And then at some point, you know, stuff starts breaking, right? With like off the shelf solutions, or you're like doing so much wrangling with the off the shelf solutions that it's just like tedious. And now you're wasting money. But at that point, that's your prototype. Then you go build, right? That's when you use like, you know, the engineering resources and really productize.
So, you know, you started in PR, then you went to a software as a service company that served the PR community. Um, so you have a pretty good knowledge of PR and marketing, I imagine, because you've been serving that community, and then in your first job, you were in that business. At what points did you decide, hey, you know what, let's bring in PR here and do some earned media, it'll accelerate the process? Or, hey,
Yeah.
let's bring in some marketing here and, you know, see if we can increase, you know, our results through marketing? Were there specific points in the development of the company where that was, you know, most important? And when you did that, how did you find those people?
So actually, I'll tell you, when I was at Vocus, this was like they bought PR Web, which was like
I remember that.
I think you remember that?
Yeah, sure.
So when I came in to product manage, actually the first thing I got to do was like basically figure out how to work, how to integrate PR Web, and actually they were in dire straits. Like they were doing a bunch of things
Who's
that
they?
Google didn't
PR
really
Web or
like.
Vocus?
PR Web,
Okay.
right? So this was like post acquisition. So you still really had I think the founder had left at that point, but you had a lot of that team there. And
And
actually
PR Web is
there was
formerly MarketWire.
no MarketWire. No, MarketWire was so you
MarketWire
had
separately.
at that point, I don't know what's happened now. I think but like at that point, PR Web was actually a startup based out
Okay.
of I think Bellingham, Washington, or
Not
Ferndale,
related to
Washington, right?
MarketWire. So
Not
mine's
related to
okay.
MarketWire, yeah,
All right.
right.
I don't remember.
Yeah. Right. So your PR Newswire, Business Wire, usually third, I think was MarketWire at the time, and then PR Web might have had the fourth most users actually. And so
It was an SEO play. I remember everyone was using
there
PR
was a
Web
big SEO.
to
Yeah, there was a
file
big
the web
SEO
for
component
cheap
to it.
because
Yeah.
no one had figured out in that business. No one was getting slapped by Google for doing follow links.
Yeah. That's right.
Yeah,
You remember
yeah.
all the.
And at
So
the time, you could
yeah,
actually SEO a company by clearing the wire. It was amazing. And then, you know,
yeah.
Google clamped down on that. None of the wires give you follow links anymore.
Right. No, I mean it was good for that, and those articles would rank too. So like you could get the articles. Actually, we did a few of those early on, like North Carolina General Contractor. You put out like the press release with North Carolina General Contractor in the headline.
Yep.
It would oftentimes rank in organic search on page
Immediately.
one.
Yeah.
So
The famous
yeah, no, it was a cool
example
tool.
is by this guy, Greg Jarbeau, who actually was the guy who figured this whole
I
thing
met,
out.
you know, it's been a
You
while, but
must
I
have met him.
spoke on some panels with
He
him
was
and I
on
knew
it.
him.
Well,
Yeah,
he was
yeah,
famous for the case study for Southwest Airlines, where he sent them a press release with cheap seats in the headlines.
hmm
And they called him back and they said, we're going to fire you. We don't do cheap seats. We're the low cost leader. And he
yeah.
brought up Google Trends and he showed him
Yeah.
search for low
All the
cost leader
traffic and
versus
conversions.
cheap traffic.
Yeah,
And they thought to themselves, they scratched their head. They thought, well,
that's cool.
maybe when it comes to SEO, we're cheap seats. We'll keep low
Yeah,
cost leader in our advertising.
yeah, that's cool. That's a great story. And it should probably, I don't know, it was probably the corporate communications guys that were pissed off at him, right?
I don't know specifically who it was, but that was the
Yeah,
story. That was I heard him speak. I heard him tell that story many times on many different panels.
yeah.
Yeah.
Um, sorry, what was
So you
I
get in
think I
there,
lost track of. Okay.
and Vocus has just acquired PR Web, and your
Yeah,
job is to
right.
integrate PR Web into Vocus.
Yeah, right. And so naturally, like everyone at PR Web like hates you initially. Because first of all, because like this is, I mean, I didn't take it personally. I'm like,
I
this
get it.
company
I
just
get
got
it.
bought. They have
Totally.
these executives from Vocus who are like telling them what to do. They don't like probably a lot of it.
And they were
And
the
now
cool
here's
kids. Vocus was the cool kids at the time.
Yeah, but not to PR web, right?
No,
Like,
but in the industry, they were the cool kids on the
oh
block.
yeah,
Yeah,
yeah, right.
which probably made
And
PR web hate you guys even more, I would imagine.
well, then they brought some like smart ass guy in, right, who doesn't know PR web at all, and we're like, this is the product manager who's going to work on this with you
Ugh,
guys. Like, so what
oh,
kind of, like, that's a great
politics,
situation,
baby.
right?
Well, I
Yeah.
imagine your political training helped you there more than anything.
You know what? I actually like was able to just like connect with the engineers there. I think I think the fact that I wasn't like a business guy, but like had an understanding of like the underlying like the architecture and the data modeling. I think I was able to speak with them, and I also didn't go in there and try to just assert myself. I think I was able to like build some good friendships actually with the engineers, and that makes that made a huge difference. We were able to like work together effectively from there. Yeah. And I
Cool.
was flying out a lot just to get FaceTime with those guys. So
Right. And so when you through that process, what were the features that were you doing an MVP type sort of thing at Vocus as well, or that was kind of pre-MVP?
so we then built SMB version of Vocus because Vocus was pretty mid-market and enterprise.
Okay.
So we built an I got to build an SMB version where PR Web played a prominent role in that SMB version, right? Um, and so I got to do that, and then we refactored PR Web into Vocus because it was written. I think Vocus was .NET, and I think PR Web was PH in some PHP framework.
Ouch.
So yeah, and the
The
CTO, the
.NET,
Vocus
man.
CTO,
.NET
yeah,
goes
right. It
up.
was an
That was a
issue.
cold death, baby.
Yeah, actually, in retrospect, I don't know. It would be interesting to connect with the CTO at the time and just see what he thinks. Whether I doubt he'd do that again. Just seemed unnecessary. Uh,
I
but at
think it
any
was a
rate,
licensing issue that drove the .NET thing, because everyone thought, oh, Microsoft's cheaper on the licensing, so we'll go .NET and we'll save money, but didn't pan out
um,
that way.
no, I think I mean PHP is like just open source. I think their issue was like they're just a bunch of .NET engineers, and the CTO knew .NET, right? I think that honestly it was not that was not the right decision, right? It's kind of crazy in hindsight to
Right,
think
right,
that.
right.
Yeah.
So the question was, and we got sidetracked. At what point, seeing as how you had a knowledge of PR and marketing, at what point did you decide, as the founder of BuildZoom, to engage PR and marketing to drive the train?
Oh, I mean, look, I think on day one, right? Like, so Dave's the other founder, and I. One of the things that we'd constantly be doing before BuildZoom was working on little side projects here and there to kind of see what we could do with organic search, right? Like, I built a blog. Actually, I was living in DC at the time and going out, and I started a blog where I would like write about clubs, and so I'd make sure that those reviews would always like rank #1 if you were to search for like the club in DC or whatever.
Did that get
Um,
you? Did that get you in?
yeah,
Did that
that
get you
enabled me to like just go to any of them that I wanted with
you
like
could
no
crash the
line,
velvet
go in
rope?
for free at any point in time, right?
Nice.
I mean, so I was probably using like I don't know if that was like the right usage of like the right application for the skill set. But that's something we were always interested in. Day one, once we were really determined, and actually Dave built all the systems out to kind of aggregate the data. Uh, the first consideration was we'd have this great unique data set, and it would drive a lot of traffic through organic search. So that's been sort of actually a linchpin of for the whole company from day one, to be frank.
What about
Actually, that was our
News?
starting point. We didn't have a lot of like interaction, or we didn't have a lot of user flows built initially. We're just like, hey, once we aggregate all the data, like let's start getting traffic, and then we can start figuring things out from there. So
But
it
from
was
a buzz
actually like
standpoint,
the tip of the spear.
when you hit Y Combinator, I imagine news goes out about that. That probably gets filed on Crunchbase. Then you close your first round. That moves on Crunchbase. So, I mean, I've got to think that those types of news breaks were valuable to you, no?
Oh yeah, totally. And then the other thing that we actually probably spent a little too much time thinking about this. Like, we built this application, it's still up, it's at buildzoom.com/map, where you can literally like search for homes. and find like permit data on homes. And the reason we did that was mostly for PR, because we basically wanted like those backlinks in to kind of drive organic search. And we spent, I mean, we did a lot that was just oriented around organic search, and quite frankly, I think a little too much initially oriented around organic search. Because yeah, I mean, when you have that many pages, you need a lot of just, you need a lot of juice to kind of rank, especially for, the more generic terms.
So a final question. What advice would you have for people in PR at PR agencies, and for people at marketing agencies, and for specialists that want to work in-house? What advice would you have for them if they wanted to work for a company like yours or get hired by a company like yours?
Yeah, I mean, I would say the better their understanding, I mean, this is really challenging, right? This is always the challenge with PR. Like, at least with me now, I guess, where I'm kind of a generalist and I'm a lot of the time thinking about the finances, I want to understand the unit economics. So I want to understand how your salary at the end of the day, honestly, at a high level, is going to translate into dollars for the company. And it's really hard to always do that. It's easy with things like sales or kind of like direct marketing. It's much easier than with PR, but like I'm gonna want to understand, this is me, right? I don't think this is like, I'm gonna want to understand though, like how you're gonna deliver financial value. At least I want to have the intuition, like a strong conviction that there is some correlation between your output and financial value. And that's the thing I think that I would say my advice would actually be like, when you look at that company and that leader, like understanding what is really like the 2 or 3 things that are top of mind for them, and how do you relate, and how do you kind of like fit PR, and how does PR support those 2 or 3 things, right? It's not always going to be like, the P&L, which is really important for me, or cash flow, which is really important for me. It may be about like brand dissemination, which is not something I understand, but actually a lot of people are really successful who are just like preoccupied with brand, right? But I think understanding sort of the 2 or 3 things that are most important for like the leadership group there, right? And really being able to like customize your story and talk about how you're going to tangibly and ideally in an empirically provable way, impact those areas.
And Jiyan, if there is a potential investor that's listening to this, or a homeowner listening to this, and they want to get in touch with you, what's the best way for them to do that?
Honestly, it's just to go to buildzoom.com. You can also just send me a connect invite. I'm on LinkedIn. I use LinkedIn a lot, so I think that's also a good way to connect with me directly. If you want to just learn more about the site, it's just at www.buildzoom.com.
Cool. What I'll do is in the show notes, I'll have a link to BuildZoom and also to your LinkedIn profile. So if someone wants to listen to that, you can just get that at ericschwartzman.com/blog.
Yeah.
We have an amazing lineup of guests scheduled for this quarter. So if you want to sign up for this podcast, you can do that at ericschwartzman.com/B2B podcast. Jiyan, I want to thank you for doing this.
Yeah, it was my pleasure. I enjoyed it. I really enjoyed the conversation.
Awesome. And to the rest of you, thanks for listening, and we'll see you next time.